Hi guys, Lee Gettess here with the Market Sense for the week of August 11th, 2015. Sometimes those two words, sense and markets, don't really go together. We're going to look at some charts that come from the Trade Navigator software, and the first chart we're looking at is a weekly bond market chart. The Fed has been talking about raising interest rates for longer than I can remember now, and bonds and interest rates are opposite directions. In the last 6 to 8 weeks here, the bond market seems to be making it awfully difficult for the Fed. In the big picture, they are still making lower swing highs and lower swing lows, but boy, that's a pretty good rally here. And last week closed almost on the high, and when they dumped back down to 156.26 was this upper moving average here, they probably didn't look very good at that point, but they certainly did hold it and go back up. So now I think we're looking at 159.28 as the projected high up here as the next upside target. Pretty good volatility for just 2 days so far, though. So, could they be back down here to 155.18? Sure, that's a possibility. It's just a surprising amount of strength in the market, largely based on things that are happening in Asia. And that makes it an awfully difficult market to trade. And difficulty runs right over into stocks as well. Even though Asia is still responsible for most of the movement here, there isn't much. Last week was inside of the previous week. This week so far has been inside to last week. Bad Chinese economic data and then a devaluation of the yuan caused 200-point down moves up and down, but they're really not going anywhere. Again, inside of last week, which was inside the previous week, which is all inside of this big sideways pattern here. They just really can't get a whole lot going. We're basically looking at the strongest support around, let's call it 2063 here at the lower moving average, 2114.15 up here at the upper moving average. They may or may not get to any of those this week, and even poking through them doesn't mean anything really. I think what we need is we need it to either break down substantially or break up substantially, taking out the highs, taking out these lows. I don't know that I'd believe that move. I think that move is likely the setup to go the other way, but you need to see a substantial break and convince somebody that that's the direction that they're moving, and then they can go the other way. I mean, that's how markets have moved over time anyway. Right now, there's nothing else to do with this puppy. They're just constipated, and we're leaving them alone. So that's what we've got for you today. I hope you can find something profitable to get yourself involved with. Thanks for checking in to see how we're looking at things.